This is our fifth study circle meet for the Chamber of Tax Consultants, and we have already crossed 150 mark, and it is a great response that everyone has given. Without wasting much of the time, I would just give a brief introduction of our speaker and then ask him to take over the session. Shri Vikram Kotak is a co-founder and managing partner of ACE Landzone Investment Services LLP, which is co-promoted by ACE Partners LLP and Landzone Partners, one of the largest European hedge funds with $20 billion of funds management AUM as an AIF. Mr. Kotak has over 24 years of experience in financial markets across segments that include fund management, fixed income, trading, and corporate finance. He has successfully set up businesses and teams in equity and fixed income segments. A key erstwhile member of Deutsche Asset Management Company, Mr. Kotak served as a Chief Investment Officer Equities, responsible for advising over $1 billion assets in equity through Indian domestic funds, India dedicated offshore funds, and allocation funds. With an experience spanning over 7 years beginning 2005, Mr. Kotak, as a Chief Investment Officer of Birla Sun Life Insurance Limited, grew the AUM from around $280 million to $4 billion in equity and fixed income. He has also served Birla Sun Life Insurance Securities Limited from the year 1996 to 2003 as the head of fixed income business, which focused on fixed income trading and distribution. With this brief introduction, we welcome you, sir, and I would like to hand over the session to you. You can begin, sir.
Thank you, Ankit, for kind introduction, and thank you everyone at Chamber of Commerce, Chamber of Tax Consultant, and thank you, Charu, for inviting me. And thank you all the participants, for taking part in this webinar. Today, I'll talk about a bit about how COVID is going to impact our life, as well as how global, scenario looks like. And still, we are in the mid of COVID. We are still not out of complete lockdown. So I'll try to kind of put a scenario about India, that how India will look post-COVID, both in terms of economy as well as the stock market. So let me start with the first disclaimer that whatever I talk or whatever views I give are my personal and maybe or may not be same as my organization. This is a standard disclaimer which we have to give, because normally we don't talk about the stocks, but in case I talk any particular stock or any particular view, that might be the same to my organization or may not be the same to my organization. So let me start with this. This is the one of the I can say it's a lifetime, at least in our lifetime, it's a biggest crisis which we have seen. We have seen a lot of other pandemic in our life, like 2011 9/11 US crisis. We have seen the 2007-8 Lehman global financial crisis. We've seen a lot of scams in India, like Harshad Mehta and Ketan Parekh, and many other things like tech bubble and everything. But this is the biggest of all. The reason being that all the pandemic which we have seen has impacted particular country or particular society or particular sector or financial area. But this is the first time the crisis which has come to human life. Like we always say, "Jaan hai to jahan hai," and this is the biggest crisis, at least since 1919 Spanish flu, which has impacted our life. Almost 2/3 of the world was in lockdown for 50 to 55 days, and now, slowly opening up. Almost 97% of the population in the world has somehow impacted by this COVID. So it's actually impacted the whole, human life. It's not a crisis which we can say is it's a particular part of society or sector. Also important to know that we don't have yet the solution for this crisis, in the sense we don't have the medicine for virus, or we don't have any diagnosis for that, and this is just changing. It's a color day by day, and I believe that we need to live with this virus for next 6 to 12 months at least. We don't have any solution as of now. The vaccine, whatever studies I am reading, it might take 6 months to 12 months or maybe more. So I think we need to live with this. Let me a little bit talk about the how some of the economies have opened up and what has happened. So I've seen South Korea, which has impacted the least, one of the least, and they opened up the economy. And since the local economy started doing quite okay, but they are export-oriented countries, so their impact on the because of the other countries are in lockdown. So actually, they've gone through the big challenge in terms of capacity utilization. So it's not simple unless the whole world opens up. Once the whole world opens up, then we'll really see the, the things started coming back to normalcy. Otherwise, we'll see this bits and pieces of supply disruption, demand disruption, change of mindset of people. So I think it's going to be a quite a murkier, times, quite a confused time, and it's not going to help anyone, at least for next 6 months. Also, what world tried to do, everyone in the world, most central banks and most economies and most governments, had tried to give a financial package and try to save their own companies and sectors and people at large. And we've seen some of the large packages coming from UK, USA, Germany, Japan. They almost spend 15 to 20% of their GDP on people at large, whereas India also gave a quite big called 20 lakh crore package, but actual package in financial terms was only 2 lakh crores. So, the package has not been very big. The reasons are very different for India because India is going through a very different and difficult time, and I'll come to that separately. But what India has spent is quite small compared to how the whole world has spent. Let me move to the next point, which is how world uh, will look like once this COVID crisis open up. I think the whole life cycle will change. I think the biggest change which we'll see is the mindset of people, the behavior of people, the disruption in the mind of a consumer at a large, and things will really change. Either the way we shop, the way we learn, the way we live our life, the way we work. Everything is just going to really go through the largest change. 1919 Spanish flu has impacted human life a lot, and it took almost 30 years to come out of that slowdown, despite the number of people were very less at that point of time. And also 1930 Great Depression actually led to a trade protectionism and also led to a World War II. I hope nothing like that happens now, but I think we are seeing early sign of China telling, US telling that will not buy Chinese goods, and UK also joining them. Almost 100 countries actually signed up the petition against China for doing an inquiry on the Wuhan virus, how this virus came, and why it's not impacted China so much as to US, UK, or other part of the world. So I think it's going to be a quite challenging time for at least next 1 year. We have a saying called survival of fittest, and my personal view is that it will be a survival of not only fittest but also people who are most adaptable in this current economic crisis. So I think adaptability for all of us will be very, very crucial and very, very important. And let me come to the new world, right? New world will be what? How this is going to change, and what are the key big pointers are going to happen, which is what my view is. If you see last 2.5 decades of the world, we have gone through a globalization. When I say globalization, in the sense we are believing in the free trade, we have kind of done export import with most part of the world. But I believe with this crisis, we'll move towards a deglobalization. When I say deglobalization, means pretty simple that most countries want to be a self-sufficient. Most country will try to see that they can source their good from their own economy or nearby economy. So today China, everyone knows, is a world factory. Every big thing is manufactured in China. I believe going forward, people are going to either move from China to some extent, and also the Western world, and also they will try to build a factory within their country. If they can't do within their country, they will kind of move nearby. So I'll give example of USA. So USA, whatever they'll move out of China, they'll either try to build up their factories in the US itself, or they might move to Bolivia or Mexico or Peru or some other countries which are in South America, which is quite near to them in terms of distance, whether it's a railroad or whether it's a road or whether it's a air or whether it's a shipping. So I think this is what is going to be one of the biggest trend which is likely to happen, which is called deglobalization. Second important trend which is going to happen is E is going to be the most important word in our life. I think the process of digitization and process of online shopping, online commerce has been happening for last many years. But my view now going forward, it's going to take the pace in a big way. Like recently, in one of the interviews, Satya Nadella, who is the CEO of Microsoft, has said that we have seen the digital transformation of 3 years in last 2 months. So I think people are moving at a big speed, towards the E. When I say E can include e-commerce, e-learn, e-work, e-games, e-health, and e-support. So I think everywhere people are moving towards the digital. So digital is going to play a very, 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 very significant role in Indian economy as well as the global economy. So I think everywhere we'll see a more use of digital and e-commerce is going to take place. A lot of investment is going to happen in technology, because since when I say it means we need a high speed data, we need internet, we need cables, we need huge investment in telecom sector. So the world right now is in 4G model. Some of the countries have started 5G, but I think we are going to move towards a 5G infrastructure big way, at least in the developed world first and then later in India. So a lot of spending, a lot of expenses will happen on the telecom infrastructure, and I believe the telecom sector at large will be very, very big beneficiary of this whole COVID coronavirus, and people are going to see that they are going to use more and more data since they are trying to kind of going to be work from home, etc. Fourth very important point is the government will become a large borrower. Since government is spending so much money on fiscal stimulus and monetary stimulus right now, we'll see government is going to be a large borrower. So every government in the world which has given the large stimulus is going to be a borrower. And on the other side, the individuals become more saver, because people have suddenly seen this shock. A lot of people are worried about their jobs, salary cuts going forward. So you'll see more and more acceleration in the saving rate in India. And particularly if you see India, our saving rate used to be in early 2000 was around 34%. When I say 34% means 100 rupees earned by individual, 34 rupees was saved. That percentage has come down to 17%. So actually we halved our savings in last 20 years or so. On the other side, America used to be a zero saving country. A lot of people used to say Americans spend more, they spend out of credit card. In 1980, their savings rate used to be a roughly 0%, 1980 I'm talking about. In 30 years, their savings has moved to 13%. So India is at 17% from 34%, and US is from 0% to 13%. So I think this trend is going to continue. We'll see more and more citizens and people at large will save more, and you'll see more government will actually end up borrowing more going forward. One of the other things which is going to happen, we all know, and there are a lot of talk happen about work from home. And I think work from home is going to be a sooner reality. I listened to Kotak Mahindra Bank CEO recently, or TCS recently in India, also Amazon, Google, Facebook. I think most of them are talking and telling their employees to do more work from home. So we recently heard TCS saying that maybe in 3 years' time, 70% of the employee may be at work from home. And many of the IT companies are believing that they can do much better by doing work from home, in terms of efficiency, also in terms of saving a huge amount of costs, and also it's not getting impacted by transportation or strikes or lockdowns and all that. And this is going to be a big trend going forward, work from home, and for which there's going to be a big investment also will happen in the cyber security, because when you do work from home away from office at a remote place, you're going to definitely have a huge issue in terms of security of your PC, of your data. So huge amount of investment is going to happen in the cyber security. Also one more important trend for the world, that when this COVID happened, I don't think so any government was prepared that this kind of crisis can come and hit us in a big way. And generally the healthcare per capita spend by every government has been at a very lower rate. Like I know America has been had a peak capacity of the hospital, assuming that only 1.5% of that population can come for a care or for a diagnosis or for the at the hospital. That's what the capacity they created. But I think going forward, people are going to be more cautious. People are going to be governments are going to be spending a lot of money on healthcare infrastructure, whether it's USA or UK or India even. So a lot of money will be spent in the healthcare infrastructure. Per capita expenditure on healthcare is just going to shoot up for most of the countries going forward. Also, a lot of spending will happen on big data, AI, 3D printing, and all this stuff. What I was hearing recently from one of the global speakers, that already they have created drones to deliver the high value items at the consumer's place. So what I'm trying to say, companies like Amazon and many other e-commerce company will deliver your stuff in America at your home with a drone. So there is no human. So this is already started, and they're expecting by 2023 there'll be at least 120,000 drones in America itself, which will deliver the goods at your home without human contact. There's also in Europe, I'd seen one of the advertisement that there's a autonomous car which takes a pizza from the pizza shop and come to your home and just kind of deliver to you. There is no driver. It's just kind of car which is just standing outside your home. You come to know that car is outside your home, and the pizza, you can go and put your code and you can pick up the pizza. So I think a lot of innovations are happening in the human life with this COVID happening. Also, one more question which I get very frequently. I've done few webinars last week and also last week, and one question which I get pertinently, that will China, whatever the US is going to shift from China, can come to India? And that's a big question, and we are hearing a lot of media announcement on that. A lot of people are talking about that India will provide them a red carpet and all that. My personal view, it will not happen. India will take much longer time to get the investment from the America. The reason is simple, that they are anyway going to be self-sufficient. They want to move the important areas like pharma and food back their home. They don't want to keep it with anyone else. Second, India has a challenge with the social and physical infrastructure. Our ports, our roads, our power condition is not as good as the China. Second, we have a lot of issue with our judiciary system, that a lot of contracts in India are not enforceable. We've seen in the case of Ericsson, and we've seen the case of POSCO in past, so, and Vodafone in the past. So I think that's a big worry which we have, that the law has not been properly executed here. That's a big worry for the world right now. Third, very important, that labor laws, land laws, very difficult to acquire a land in this country. So there are multiple challenges which India today faces, and also unfortunately there is a lot of opportunist change which India do in terms of bringing the foreign investor, and then they kind of try to. That's what the worry foreigners have in India right now. So I think it will take a long time for a lot of money to shift to India, and we need to work a lot on that. We need to work on spending a lot of money on the infrastructure, which we are kind of delaying it for last many years, and we need to really spend time on our labor law and legal system, which is going to be very important. I'll give one example of Apple. Apple, every ninth out of 10th phone is manufactured in China, and now Apple is thinking to get out of China and may move to some other country in the world. But despite Apple was when Apple was making phones in China, the China was only making 5%, and rest of the money was going back to the Apple. And at 5% margin, China was able to supply whole amount of Apple phones, Apple iPads, etc., at just 5% margin, at 5% cost. Why they were able to do it? Because they had economy of scale, they have one of the best infrastructure in the world, and despite of that, they want to move from the China. So I think you understand that India will take much longer time before we get into that model, because we need to work on our efficiency a lot. Let me move now to India, and let me break into two parts. One is the pre-COVID India and post-COVID India. So before the virus detected, I'm talking about before January 2020, India was anyway limping with its economic growth, and we were anyway struggling to grow around 5%. The reason was very simple, that over the last 3-4 years, whatever happened in India, like demonetization has started impacting India a lot. And post that, the GST came, which is, in my view, is one of the best reform government could have done. But GST implementation was in a hurry, and it has impacted a lot in terms of bottleneck, the refunds, and the things are stuck, and number of procedures. And I think most of you are dealing with that, so you know better than me. Then ILFS happened in India. Then the lot of banks, large NPAs are happening. A lot of large corporates account are getting impacted. There's a big pain in the MSME and SME sector. So India was anyway struggling a lot, because India is ultimately all about the SMEs and MSME and entrepreneurs. So that is a big reason why India was anyway struggling before COVID. And after COVID coming, India has actually kind of seen a big shock. Let me give one more anecdotal on about India and how FIs behave in India. I being a partner with the FI firm, I'll try to kind of put some numbers on that. 2004 to 14, I'm trying to talk about a pre-Modi era, which is 10 year of 2004 to 14. Average investment from the FIs India got every year is close to 16 to 17 billion dollars. So I'm saying every year India got between 16 to 17 billion dollars in pre-Modi era. In 2014 till today, our average investment from FIs has just come down to $5 billion. So from 15, 16, 16, $17 billion, we moved to a $5 billion average annual inflows from the FIIs. And if you add 2020 in the calendar year from January till May, FIs have sold almost $8.5 billion. So if you remove from that, then that number will further fall to close to $4 billion. So I think that's one of the reasons why India is not able to kind of do well, because we're not seeing FI flows in markets. That's why also struggle for long period of time. Recently, we've seen Reliance has been raised a lot of money. In fact, they raised more money than the government, full divestment of government in last year. So they raised money from Facebook and General Atlantic Partners and Silver Lake and a lot of other people. So I think Reliance has created a big platform, and today Reliance is 11% of India's market cap. So one company is 11% of India's market cap. Let me give one more example. Microsoft and Amazon combined is higher than the India's GDP. So both of their market cap is higher than India's GDP. So our companies which are not in existence 25 years back are larger than India's market cap. So you understand that what kind of work we need to do. I think there's a lot of work our country need to do right now to reach to the next level of this. There's one more thing which is coming to my mind, that what government should have done in the current scenario. In my view, they should have either cut the personal tax, personal income tax. Either they should have cut the GST big way to bring back the consumption. Third, they raised the VAT on the petrol and diesel. They should not have done, and pass on the benefit to consumer, because that could have saved consumer 7 to 8 rupees on both petrol and diesel. And fourth, very important, they should have actually transferred the money in the hand of farmers or the migrant workers or lower middle class by way of DBT. I think if they could have done something like this, then we could have seen India could have been coming out of this post-COVID scenario much better, like what's happening in the US right now. But I think because of the fiscal constraint, I think government is not able to spend that kind of money on the stimulus. Also very important to see now going forward for India, and I'm now coming to post-COVID or mid-COVID situation. Right now, we are still, some of the states have opened up, some of the airlines flights have started taking off, but I've seen a severe lockdown still in Mumbai, because of the Mumbai is in a very, very difficult situation. Also, Maharashtra is not completely opened up. Also, some part of Delhi, Himachal Pradesh, Punjab, and Andhra Pradesh, I think they're all struggling still with the solution. So unless we see a whole economy opening up, unless we see a lockdown completely go away, we'll not able to estimate how can we grow going forward, and how much growth we'll see. In current scenario, my own view is that India's GDP growth for current year, the financial year 2020-21, which is a current year, will be somewhere between -3% to -7%. And these are the numbers which are going to be there, because we already wasted our 3 months, and we might waste a couple of more months in the complete opening up. So, and also after that, it is not easy to bring consumers straight away directly inside this, inside the consumption mode. So it will take some time to economy to recover. But the good part, the positive part, that next year, which is a FY 21-22, March 2022, our GDP can be as high as 10 to 14% because of negative base. It's just because of base, nothing to do with the reforms or something. But the bigger question is that, can we grow at 7-8% consistently going forward? The answer is yes, but I think a lot of work need to be done by the government to reach there, because growing 1 year 10-14% may not help, but we need to see that can we grow it consistently 7 to 8% for say next 10 years, then we can achieve that $5 trillion plus target for India GDP. So I think a lot of work, in my view, need to be done before we reach there. Let me move to what are the sectors, which are looking good, and let me come to the economy and the market straight away. What are the sectors which are looking good? The sectors which are already doing well and which is likely to do well is pharmaceutical. We discussed about the per capita healthcare. So pharmaceutical is going to remain a very, very important sector. Consumer staples. When I say consumer staples, is a consumer day-to-day need items, whether it's oil or it's a wheat or flour or rice or whatever. So I'm just trying to see the consumption, day-to-day consumption, toothpaste or something like that. Technology, I think technology is going to see a big change in India and the world. I think a lot of people will move towards the higher use of technology. So technology is a sector which we think is going to do very well. Online gaming and OTT, OTT is Amazon Prime and Hotstar, will continue to do well, and we might change our habit, at least for next 1 year, to sit at home, have a popcorn in front of large screen rather than going to the theater. So I think that's going to happen in the short term. So they are going to do well. Rural focused economy will do well because we have a very good Rabi. We have likely to have good monsoon, and I'm hearing the sowings are going to be very, very good. So I think agri inputs, agri related commodity, rural economy is likely to do much better than the urban economy. So agrochemical, around those themes. As I discussed, once we open the lockdown, then we'll come to know which are the other sectors can do well. So let me say, if the lockdown opens in July, I think we'll see people start spending on two-wheelers. People start spending on going out and having pizza or having a footwear or going to buy the fans and AC and dishwashers and all that. So this is going to be the area of spend, which is where people will go and do spend on a low ticket items, not a very high end item. So luxury goods or high end shoes or high end apparels will not be immediate priority for the consumers for sure. Which are the sectors which will not do well, whether lockdown opens now or later? Some of the sectors which I think are in deep trouble because of the COVID as well as pre-COVID Indian conditions. So one sector which I think will not do well is the infrastructure, because most companies in infrastructure segment is heavily debt loaded, so they will not do well. NBFCs, which have not been so prudent in terms of their lending, will not do well. Also, hotels, tourism, airlines, theaters will take some time before, at least 6 to 12 months before they start coming on the track. And a lot of companies may not have the sustainability for next 1 year or so. So that sector actually can be clearly avoided. Any company which has been heavily leveraged will have a huge impact in surviving for going forward. So any big leverage company where the loans are very, very high will have surely a huge issue in terms of their sustenance. And with the work from home, which is going to be the future norm, I think the commercial real estate will have a downturn, will have a lot of issues in terms of demand, and you will see more supply coming from there. Even real estate overall, I think, will have some impact on the demand side, because in next 6 months to 12 months, I'm sure that most consumers will try to focus more on the day-to-day items and not to spend heavily on the large ticket items or the large investments. So this is the summary of the sectors which I think is likely to do well or not going to do well. Let me come to my final segment, which is what we should do, what investors should do, and that's a big question which we all of us have. I think whenever this kind of crisis have happened, we've seen that immediate impact on the consumer's mind or the people's mind will come, that how to save, how to don't overspend, try to kind of keep your money for the heydays. So I think that's the first thing which is going to happen. So my first advice to everyone is that keep your house clean. When I say keep your house clean, it actually means you have to keep your house clean, as well as don't have the borrowings. So I think you need to see that you don't overly leverage in terms of borrowings or the business borrowing or personal borrowing. So you be very, very careful, at least for next 12 months, to see that you don't borrow much. Second, which I always say, that you need to have a very, very prudent asset allocation. We can't be a completely equity investor or completely debt investor or completely real estate investor or completely gold investor. So we need to kind of create a basket where we invest prudently in 4 large asset class, which in my view, equity, real estate, gold, and the fixed deposits or any bonds which you are buying. Now, when you do asset allocation, which is other advice, that you need to be very careful what you're buying. Because it's very easy to say that, okay, 40% equity or 40 debt or 10 gold or 10 real estate, whatever. But what you're buying in debt, what you're buying in equity. So that's a very important point, that if you end up buying some bad company in equity, you'll anyway lose that money. Also, what you're buying in bonds, because we have seen recently there are three big crises happening. We have seen Punjab Maharashtra Cooperative Bank, Yes Bank having its own problem for tier 1, tier 2 bonds. They didn't pay for that. ILFS has been one more big crisis. Diwan Housing is one more big crisis where a lot of debenture holders still not got their money back. And very importantly, very recent is the credit risk fund crisis where Templeton has closed a fund and they are not paying investors back. So you do very, very careful in choosing equity or debt, what you're buying. I think that's going to be very, very crucial. If you don't understand, my advice simple to all of you is go and buy a cheaper ETF. ETF is exchange traded fund, which you can go and buy. It's a much lower cost than the other fund. And even if you want to buy some equity fund, then you should go and buy large cap funds of a good fund house. I think this is what the simplistically you should do it. We've seen last 1 decade has been a lot of money made by most of the people who have been invested into good stock. My own advice now for next 3 years, we need to focus more on preserving the money rather than going, taking a more risk in the system. So I think next 2-3 years, you need to be very careful in what you're buying, how you're buying. Of course, that is a general mantra which you have to always remember. But next 2-3 years are going to be very important, where you go and preserve your health rather than just overspend or just buy anything, do over leverage in markets or something. Please avoid that. That's going to be very, very crucial. And last, but not the least, that we are surely headed for the slower economy in 2021, which I mentioned. And 2022, you will see a big bounce happening. But that bounce, we need to see that how government takes advantage of that bounce and try to kind of create more reforms, put more, big reforms, and try to kind of bring back the economy on a track. Because right now we are in a mid of the crisis kind of situation. So this is what is all from my side. That do your asset allocation best, put into large cap or ETF. Within the asset allocation, just try to see that you buy a very high quality equity and bonds, and whatever you put money, just be double careful that where you're putting the money, and preserve your wealth. I think that's the mantra which I leave on the table for all of you. And I'll be very happy to take any questions any of you have. Thank you so much.
Thank you, sir. We have a lot of questions that have come up. Before that, I would also like to mention to all the attendees, there is a question answer panel which is there right at the bottom, where you can post your questions and start asking questions. In the meantime, sir, we have one question. One of the biggest challenges any government generally faces is the fiscal balance. How much to borrow? Presently, I mean, as you rightly mentioned, India is again facing that challenge.
Yeah.
So how do you, there is a very high possibility that there can be a fiscal rating downgrade which India can go through.
Yeah.
What will be the impact of the down rating which we can see to the Indian market?
Sure. I think that's a very good question someone has asked. And my simple view is that that's why I said in my initial remark that the world over governments are going to borrow more, right? Because of the crisis, and citizens are going to save more. And what the advantage which US has, or large developed country has, even whatever number they borrow, the rating agency will keep their rating same. Whereas India faces a typical challenge, being an emerging market or so-called developing country, that once you extra borrow, you will have the challenge of having a rating downgrade, which is right now looming on our head. But here there is one catch. If government can, talk to rating agency, and they can actually say that this money is actually going towards the growth of the economy and not going towards freebies, or not going towards a wastage of money, or something like that. So I think if they able to create a stimulus which ultimately spend in a very productive way, which will ultimately bring the growth back, then the rating downgrade can be taken care. But if rating downgrade happens, that's a question which you asked. I think the immediate impact which we'll see, you'll see a lot of flows going out. Anyway, the India is not getting the favorable treatment from the FIs for last 6-7 years. And a lot of flows will go out, both in the bond market and the equity market, which will impact our currency. Because once you see the foreign flows getting out of the country, you will see a huge impact on our currency, and which can actually have a impact on. So whatever we import is going to be more expensive. So I think we need to see that we manage this rating part of it, and how productively we can use this stimulus to kind of bring back the growth rather than wasting this money in the wrong areas. I think that's going to be the challenge for the government.
Vikram bhai, Ankit, 1 minute.
Yeah.
Vikram bhai, Mehul Shet here. Sorry, I was late in because of some net issues. See, I was wondering where in last meeting, I mean last budget session, our Prime Minister was very keen on this uh, car sector, that is motor vehicle sector. They were promoting too much of electric cars. They were promoting to a large extent electric cars.
Right.
Now, what happens to the motor and ancillary industries if we shift to electric cars? Because a lot of companies are into ancillary production.
That's a good question, Mehul bhai, and I didn't thank you. Sorry, I didn't see you. So thank you so much for inviting me. So the point here is that when when oil was at $70, everyone in the world wanted to move out of the crude, in a sense, move out of the normal cars to the cars which are eco-friendly, which will save pollution, which will save the import bill. And India was anyway, like everyone, when American talks, we want to have e-car and Tesla, and so India was also part of that. And we announced scrappage policy will happen, and this will happen, and all that will happen. My view, that project will be delayed to some extent because one, the globe is going through the slowdown. So you'll not see a crude prices going to go up in a hurry in a big way. We are not going to see $80-90 again, at least in the next 2-3 years time. So that's the one reason. Second, what happened, there are a lot of other priorities, Mehul, by which the country has right now. The biggest priority in my view is migrant laborers. How do you really make them settle in their houses or in the places where they are going to stay? How do we bring back? Because if they don't come back to Mumbai or larger cities, we'll have a huge problem of drivers and maids and factory workers and all that. So I think the bigger challenge for country right now is how do you make them happy? How do you see their lives are saved? How do you see that their kids are being taken care, their kids educated? So I think there are a lot of priorities. I think even if the prime minister want to do it, they should not do it and in a hurry. So there is no need. And also important to see that post COVID, my own view is that, and I was looking at one of the survey done by Nielsen, that pre-COVID, a lot of people wanted to buy a car. 31% of people wanted to buy a car. Some 30% people wanted to go for a foreign travel. 20% want to upgrade their car and all that stuff. Now the whole mindset, 50% people say I want to save. 30% people say I want to only buy groceries and come back home. So the mindset post COVID also will change. So I don't think so car will come back in a hurry. Even if the COVID finishes, Indian car demand is going to go for halt for sure. And there are different views here. A lot of people say that social distancing will make people to buy more car. But I think India is a very innovative country. We had seen in Kerala, I'd seen one of the taxi video in Kerala that they put a fiber between the driver and the behind seats, so they can actually have 2 seats behind with the fiber in between. And it's called social distancing. Why should you buy a new car, right? You should just go and do this kind of patch up work, which is important, I think. And why should we waste money on the car? So I'm not expecting e-vehicle is going to be in a hurry. In case that come, I think we'll have a huge impact on auto ancillary anyway, Mehul bhai, because I don't think so cars or trucks or more four-wheelers are going to be sold in next 1.5 to 2 years. So you'll have a huge impact on auto ancillary industry anyway. So it's going to be a big challenge for them. Two-wheelers will be much safer because a lot of people use two-wheeler for a lot of delivery and a lot of other part, and it's cheaper. So people, and also replacement cycle is very short in two-wheeler compared to four-wheeler.
So as you mentioned about asset allocation, what is your view on gold for investments?
See, my belief, and I keep on writing on Twitter and my news channels and all that Indian women are the best investors in the world because they keep on buying all the time gold. And finally, gold in last 20 years, 10 years, 15 years, 5 years, gold is outperforming equity. So thanks to them, we bought a lot of gold. And despite a lot of hesitation from our side, we end up buying because we don't have any other option. So we kept on buying gold. On a serious note, I think gold is an important asset class, Ankit, because we can't live without gold. And in times like this, when there's a lot of risk off globally, we don't know, we don't have certainty of the asset classes, and gold is a very, very big hedge at that point of time. But having said that, you need to have a judicial mix of gold, FD, real estate, and equity. We can't have completely bought on the gold or neither on equity. So gold is going to remain a very crucial asset class going forward. Of course, the reason a lot is gone up a lot, but I think it's going to be a perfect asset allocation tool in my view.
But India, per se, as an economy, I feel I mean, for us, fixed income usually used to mean fixed deposits. The debt mutual funds is still not that well managed, or you can say not that well popular amongst Indians. And now, considering what we have gone through, particularly with ILNFS and New Templeton, how do you see the debt market performing over the next 2-3 years, as in investments coming in?
That's a good question. I think debt market will do well overall because interest rates in India is going to come down. Okay, because we are seeing the zero interest rate in the 40% of the global economy. Almost $15 trillion worth of paper are not earning anything. So Indian interest rates are also going to remain here only or going to go down. So overall debt market might do well. But your question about where to invest in debt, I think there are only two products in my view where you should invest in debt. I think one is a FD, which is a very straight simple. Go to one of the finance bank. Don't go to a small bank or cooperative bank or something like that. Go to good banks. I don't want to give the names, but large banks, and put your FD. And second, you can also put into debt mutual fund where you are sure, or a gilt fund where you are sure that what is the asset they are going to buy. So one has to do your own due diligence before buying a debt mutual fund. Wherever you find there's a yield advantage there. So for example, if you are generally getting 7% yield on debt, someone tells you that I'm going to give you 11% on this product, you should first think that why should he give 11%? So I think you need to really work hard on saving your money, in sense protecting what you made till now, rather than going for an extra yield. Because whenever there is extra yield came in the picture, whether it's a pre-Lehman crisis, or we have seen NSCL commodity scam, or we have seen recently credit risk fund, which is offering 1-2% higher, finally ended up losing, investor ended up losing money. Even a cooperative bank like Cooperative Bank was paying much higher than PSU Bank and good private bank as interest rates. And what we have seen over a period of last 20 years, we've seen 50, 60 cooperative banks have gone bankrupt. I think, and people have suffered a lot. The recent example is Punjab Maharashtra. Even I never thought that Punjab Maharashtra can go bankrupt. But this is a case in front of us. So you need to be very careful in choosing a quality versus return. A lot of people focus on a return and they don't focus on quality. I think it's a time has come where people have to forget about the returns, have a lesser return, but see to it that your capital is safe, your principal is safe. That's going to be the key point for next 3-4 years.
A lot of participants have asked questions on the banking and finance sector, and also vis-a-vis, I mean, within banking sector, how do you perceive the public sector banking to perform overall?
So banking, when you have an economic slowdown or NPAs or crisis like COVID, banks and NBFC will definitely have a huge impact because 4-5 things happen. One, clearly people delay their payment. A lot of people lose their jobs or lose their businesses, or a lot of companies lose their businesses. So let me give you example of hotel sector, right? At least for next 6 months, we are not going to see any hotel is going to perform, or airline sector, or even theater, right? Or even a tourism. So even a lot of economies like tourist economy like Philippines and all that will have a huge impact on their economy. So that is the one reason. Second, people lose their jobs, so they don't able to pay their EMIs, and so banking and NBFC is going to be the biggest impacted sector. And I believe I'm more negative on the sector right now. And but there are good quality assets within the banking. There are good banks which are within the banking who are managing their businesses with a lot of good risk management, technology, high quality people, and high quality assets. So I think we can actually kind of buy those strong private banks as a part of the portfolio. But otherwise, I think the impact on a banking and NBFC will be very, very negative. Things are going to be much bad than what it is today for banking and financial service sector.
So Indians have a lot of affinity for the real estate sector. What is your view on that?
So real estate, as I said, the commercial is going to get a big impact because I personally feel that a lot of people, after staying home at 2-3 months, I think people change their habit. And I'm telling you my example that I am at home, and I believe that I'll go to office only 2 days in a week going forward because I'm more happy. I'm using more efficiency. I can read. I can flexi my things as I want, and everything is available at your home. I mean, the webinars and technology. I remember previously you used to come to big hall to talk to people. Now we are doing on webinar. It's much more cost efficient. So I think with this thing happening, surely the real estate will have a huge impact in short term and medium term, particularly commercial real estate. What I see about the residential real estate, India still is a under penetrated market for a lot of people still want to buy a home. But we really next 1-2 years are looking tough period, because my belief, uh, overall job sector, overall Indian employee workforce will lose a lot of job. We'll see a lot of salary cuts happening for next 1 year. So I don't think so people will have propensity to buy real estate at this point of time. So net real estate, you need to have allocation on real estate, but I think you have to be very careful in build what you're buying. Again, a good project, ready project, very good builder, very good quality. But I think next 2 years are very tough for the real estate sector, at least 2 years.
Another interesting question is, in the current scenario, we're seeing a lot of countries injecting cheap liquidity into the market. More so since the late 2008, what we saw, and it has got further aggravated. Will various governments will ever be able to withdraw the liquidity which has been continuously injected since 2008? And how would this actually, I mean, is it sustainable?
That's actually one of the best questions. I think nobody at least predicted this coronavirus, and in my view, there was no other option other than at least give a stimulus, a monetary stimulus or fiscal stimulus, to see that economy doesn't collapse dramatically, and that's what I think most central banks have done. There's no free lunch in the world, right? So what will happen after this? And this is a very interesting. Okay, that what will happen? Assume that US says I will shift Apple say I'll shift my manufacturing from China to US, okay, or anything else, or my healthcare business or my food. What will happen immediately? You'll see a cost will go up, right? Because US is much expensive to manufacture than the China. So what will happen that you'll see cost going up, and finally this will somewhere going to hit the inflation basket, okay? But this is not going to happen in next 1 year. It's going to happen later than that, and then you'll see actually a run on the interest rates, because you'll see interest rates are going to go other way around. But this time is going to come once the economy settles, because economy right now is in a shock mode. Once the shock is over and we are back to normalcy, a zero interest rates or minus interest rate cannot sustain, because that will lead to a lot of leverage. And leverage is, as you know, leverage is bad. Once the leverage starts, people start building on that leverage. You'll start seeing a financial crisis. You'll start seeing financial scams. You'll start seeing, the more demand for money, and which will ultimately drive the inflation. So this interest rate cycle, it will continue for next 1 year, because we are in a shock, and we are in the global economy where there's not much demand is there for this year, because most of the economies in this year are going to be a negative growth, except China. China might grow at 1% or 0.5%, but all other economies, US or UK or India or Germany, all are going to see a minus 2% to minus 8% GDP growth. So I think this year is going to be the easier for liquidity. But in next 2 years time, what the question someone asked is right, that central bank will have to kind of revert to the mean, because they can't continue doing this whole their life. Because 2007-8 we could have managed much better, because much lower leverage on the global balance sheet, on the government balance sheet. But today most balance sheets are just kind of gone haywire, most of the balance sheet, and people are just spending money left, right, and center. They're printing money, and when you print more money, your value of currency goes down a lot, barring US, because US is the mother of all currency.
So one question we have is, what is your current opinion on the current investment strategy by India on the MSME sectors? There is a lot of thrust on MSME, particularly with a lot of announcements also being made by the government. How do you see that helping our economy?
So the MSME is in trouble for last many years. I think the country, the two reasons why MSME has been badly hit, in my view. One is clearly the automation. I think when you see for example, Amazon giving you delivery at your home, right? Someone is going to get impacted. Some shop is going to go shut, because if you buy from Amazon, someone's job is impacted. So that is one reason that automation across the board has impacted a lot to the sector. Like example of our taxis, right, in Mumbai, you have Uber and Ola, which is more used today than the Kalipili taxi, because of technology change. That's why the Kalipili doesn't get the same kind of people. So I think technology has impacted MSME already. They hit a lot to this one. Second, Indian MSME, like I'll give example of textile sector. Textile, we used to be a manufacturing hub 15 years back. We used to be a global textile hub 15 years back. But because of our policies, because of our challenges, China, Vietnam, and Bangladesh actually overtook us in the textile. So I think government policies also has impacted MSME a lot. That is the second. So these are the two reasons why we are seeing the technology change, and government policies has impacted the MSME more. And also third, in my view, and which some of you will agree, the GST. The GST has been, unfortunately, is not able to give the fillip to the sector as it was previously there. And people, I know a lot of people in Surat, 6 months of GST refunds are stuck and they're not coming, then dispute, this happened, that happened. I think you can't, this cannot continue, right? So MSME will take time. What government rightly did, and which is correct, they've taken a good step to provide the guarantee and the liquidity support to the MSME sector. I hope we come out of that, because we are seeing the big change in technology, and India, unfortunately, is not able to catch up to that technology. Maybe we are using too much of technology, but in a business process, I think the MSMEs or SMEs are not able to kind of take it to that level. And things are changing very fast. Like Mehul Bhai asked me about auto ancillary. There are thousands of auto ancillary SMEs are there. How do they survive? How do they fight with the biggest giant in the country? Like now we are seeing a Geo coming up with the same like Amazon, the home deliveries and the groceries and all that. How do you see this going to help small companies and small entrepreneurs? So it's actually a challenging time for MSME for long term.
Another interesting question we have is, what will be the impact of Reliance Facebook JV on various industries in India, especially retail, healthcare, or finance?
Oh, it's going to change the whole structure of industry for sure. I think consumers are finally beneficiary of whatever innovation happen. When you have technological change happening anywhere, the final benefit come to consumer. We've seen in the case of Ola, Uber, we've seen in the case of Booking.com or Make My Trip, or anything you pick it up, anything. Even Amazon. I think Amazon is one of the finest grocery store we have in the country, because you can see, you can pick it up what you want. It comes with at your home. It comes in nice packing, properly done. Pilferage is taken back. So I think it's a super model which I think Amazon built. So I think it's going to impact whether it's a Reliance or Amazon or any company which comes with the newer ideas or disruptive ideas, like we've seen Oyo, Booking.com. I think it's going to impact a lot of people. Like Make My Trip has actually practically closed the travel agent business in India, right? And most travel agents has to give up, or they have to come to that technology which they can't cope up with the Make My Trip or at that level. Booking.com actually took away the business from travel agent, because we used to kind of go and to sit with the travel agent, book our holiday, book our hotels. Now everything is just online and finish in 15 minutes. We don't need to have a 3 or 4 sitting. So it's going to change. Technology is going to change the way we are going to live. Important alphabet in our dictionary. Everything is going to be. Look at education right now. In a mobile, you get the whole education, right?
Right. So another industry apart from the technology sector, where China was thriving, building mobiles and etc. Another sector which China was thriving was on the chemical sector. So how do you perceive the chemical sector going forward with the negativity that people have over China, whether you can see a shift coming to India or not?
Yeah, you may see, because chemical, again, India has spent a lot of time. I think India has a good quality chemical companies, and India has spent a good time in pharma and chemical on research. People have done a good job, and it's a complicated industry. So you might see some of that coming to India, some of that. But today, despite of being large pharma industry or large chemical industry, our ingredients, all 50% of our raw material ingredient comes from China. So we have to really see this, how it's going to map out. But summary, I think healthcare and chemical, in my view, is a future industry to focus on. It's going to continue to do well.
We have an interesting question. What are your suggestions on for judicial and labor reforms? 1. 2. Modi was considered a pro-business leader as a chief minister of Gujarat. What went wrong during his tenure as prime minister, resulting in the reduction of the FPI investment as compared to 2004 to 14?
So first is a labor reform. I think what I've seen in India right now, that we are very opportunist, right? Now this China wave has come, so suddenly people have started talking about labor reforms and this, and I'd seen UP government saying that you can remove labor, there is no labor laws, and they've passed something, or they commented something that, okay, we are relaxing labor norms, that you can close factory, you don't have any liability. After 15 days, you're coming and saying, no, we are taking back what we said. Now, this is a very opportunist kind of move, right? Like recently, so that's a one. Second, recently government has said that all this Navy canteens and all that, they cannot sell foreign goods, right? And then they took back the circular. Now, these are very, very short-sighted reforms. Unfortunately, we are not spending time on long-term solutions. We are spending time on catching up. We are spending time on very, very short band-aid reforms, which is not going to help. Now, I'll tell you why America is such a big country and why it's so successful. Because America has a standardized law for everyone. America gives the government-sponsored research. Is it Intel's and Google's and Amazon's of the world? This is actually all the product of government-sponsored research. You need to spend a lot on research. We're not preparing ourselves. Like that e-vehicle suddenly was so popular, and now we are not seeing that. Scrappage policy I'm hearing for 4-5 years is coming. It's not come yet, and it's not required to come now, of course. So I think we are too much spending time on talk and political fights and all that, rather than really taking this country to next level. So I think we need to work a lot on labor reforms. It's not only labor reform, but just try to see that the whole informal sector. How do you bring them in a social net? How do you bring them that they can live whole their life with a pension? A fruit seller, a fruit vendor, or a sabji vendor, we get. So I think it's going to be really a messy area, but we need to have a really large, big bang structural reform to see that everyone gets an equal opportunity. And I was recently quoted on Twitter that I think we need to think about this migrant labors, because this has really gone through a big pain. I don't think so anyone is going to come back in 6 months. But also see to it that these people are suffered. Try to see that we create an education system for the kids. At least they cannot suffer. So I think this is a time where government has to think and take it to next level. Coming to the, why FI has not put more money in India than pre-Modi era and post-Modi era, I think we have failed. I think we have failed in terms of creating a long-term approach. We have been brought many reforms which are very, very good. I think GST, in my view, is one of the best reform a country can bring. But the implementation was haphazard. It was done in a hurry. The solutions are still not out. I was talking to Bharti Airtel. They got a refund of 2017 in 2020. How can a company run? A working can get impacted a lot. So I think we are still doing a band-aid reform, and reform was all about. It's what we need to do. And we have to invest a lot of time, a lot of money in the long-term products. We are not doing that. We are just kind of catching up. Like I was saying about research, I think we need to work on research. When you say Atmanirbhar, we need to create a scalability, a situation. Why should Amazon can be a large e-commerce company in India? We could have done ourselves. But I'm trying to say that we need to work on that. It's not a one-day solution. It's not a 1-minute solution. We need to work on all the aspects. We need to kind of see to it that everyone is benefited out of it.
The most famous of all questions is always, is it the right time to invest right now in the equity markets? Right. And again, if one is looking at investing, do you think ETFs could be considered as a good option of starting investing, and whether one should look at specific sectoral ETFs or should go for the market ETFs?
Okay, that's a good question. I think I'm not an astrologer, Ankit bhai, so I can't say that there's a good time to invest or not, unfortunately. But I think when you are asset allocation guy, when you are saying that I'm earning 100 rupees, I save 30 rupees, and month on month I invest that into my basket, which is real estate, FD, gold, and equity. There is no timing. You can't time today, tomorrow, day after tomorrow. It is very difficult to time. I can say next 6 months are a time where actually you'll get a lot of opportunity, because India is going through slowdown. When we'll hear that Maruti is selling 10 cars and 20 cars versus 1 lakh car, you're going to get a cheaper valuation. So next 6 months, you can actually allocate. If you're not invested in equity, it's a good time. For 3 to 5 years, you can actually buy equity in next 6 months. But my advice to everyone is simple, that continue investing every month. Why we want to wait for a particular time or index or whatever? Because when you see after 10 years, okay, assume that we get 10% CAGR and our index goes to say 20,000. Whether you invest at 8,000 or 9,000, how much difference it makes to you in a return on an annual basis? Nothing. It's just 0.5%. So why we need to time? That's a point one. Second, sectoral ETF is a scam in my view. I think nobody should invest into sector fund, because the problem is with sector fund is that before 2000, technology was a famous sector. 2005, 6, 7, infrastructure was a famous sector. Pharma, nobody was asking 6 months back. Today, pharma is a big sector. 6 months back, telecom was on a deathbed. Today, telecom is an important sector. The sector is not going to help anyone. I think the best way to invest is ETF, if you don't understand anything, or a large cap mutual fund. I don't advise people to go for some sectoral themes or some seasonal fund, or people say this is an India opportunity fund. What is India opportunity fund? So focus on ETF and large cap. ETF is a cheaper option in my view, and that's a very good option, because finally you're going to get a nifty return or index return, which is going to come to everyone. So I think it's a good investment to go for. It's a good call to go for ETF or a large cap mutual fund. And sectoral fund, please don't touch it. I think you'll not even remember, even fund manager will not remember after 5 years what sector he bought. So it doesn't make sense. It's a seasonal flavor. It doesn't help in long term.
Sir, once the market started falling post COVID, and the amount of fall that we see, we were receiving a lot of messages where the PSU companies were compared in terms of the dividend yield which they were having. So, I mean, do you consider PSU as a good investment bet looking at those things?
Okay. And I think I also missed the question which you asked earlier, the PSU banks. What's the view on the PSU banks? So I'll give the answer combined. And my only problem, so PSUs, India has one of the best PSUs globally. Okay, so best of the banks, best of the defense companies, best of the power companies. But unfortunately, what has happened in last 5-6 years, again, I'll blame part to government. That government has tried to kind of doing mergers and divestment and ETF, PSU ETF. They actually destroyed the value of the Indian PSU sector. Today, I'll give you an example of largest PSU bank in India. Is available at only 25 rupees. Okay, it's 150 rupees, but rest is sum of parts and all other subsidiary value. Now, how can you have India's largest bank at such a low level? The world's 2 top bank is from China, and both are PSU bank. The world's largest liquor company in terms of market cap is China. Again, it's a PSU. So Chinese actually made the best out of PSU, and Indians have actually given up the PSU. I give the example is simple, that you time by time you take large dividend from this company, you do a mergers of this company without even consulting, discussing, and also what they do is a lot of money they strip out by way of divestment. So a lot of supplier papers comes in this good quality PSU. Also very important to see is PSU companies have to manage not only the current employees, but the retired employees' salary also, which not happen in the private sector. So in my view, that actually hits the efficiency of PSU sector. So my personal view, PSU is avoidable, surely. But right now it's come to a very cheap level. Someone can, if he has understand better, he can do that. But my personal view is that PSU sector will not give the capital growth. They might give a good dividend yield at particular point of time in that particular cycle, because the metal PSU can give you a good dividend for 2 years, and then they come to loss because of global cycle. Your dividend will go up. So you can actually time depend upon one's appetite. But I'm not a big fan of Indian PSU sector as of now, unless they, again, there is a lot of reforms required in the PSU sector.
So, what is your view on the healthcare industry, in particular the hospitals?
Okay, in short term, hospitals are definitely impacted because government is going to acquire all the hospital for COVID, and also they want to kind of what they say, manage the prices of these hospitals. For short term, it's not good. But yeah, India is underpenetrated in hospitals. We have less than 2 beds per 1,000 people in ICU. So I think India has a huge opportunity for the healthcare and hospital sector, and I think a lot of players are going to come. And with this kind of virus happening, a lot of focus of people and also the government and the corporates will go into building up the good quality high-end hospitals. And so I think a lot of focus will come on hospitals. It's a good sector for long term. Till time the COVID is there, you might see a government interference in the pricing and all that, but that could be opportunity for long term.
So do you see people buying more insurance after what we see? So do you think the insurance sector should perform good over a period right now?
That's a good point. I actually miss telling that insurance can be a one large opportunity. The only challenge with insurance, and I being an ex-insurance company guy, my view is the insurance are very expensive in India. Okay, so we have a product which are charging you 30-40% commissions and all that, which is not good. So you need to be very careful. So one, if someone want to buy insurance, he has to see that what is good for him, a health or a term life or whatever. But finally, from a point of view of penetration, I think insurance has been quite underpenetrated in India, and I think a lot of people will try to, because I've seen a lot of people have neither they have great insurance basket, or if they are insured, they are underinsured. So I think there's opportunity so insurance company actually can do well over the next 3 to 5 years. Only problem is that they are more expensive, they are more physical workforce, and I think with the time passing, we'll see a more digitization in the insurance industry also, which will benefit both customers and the companies in their margins. It's a great sector.
So what is your call on INR, the pressure that is being created right now, and do you think that can also brighten up the export segment in India?
I think export segment India is INR is anyway is a extra kicker, because export is, in my view, nobody do export for the rupee or a higher rupee or something like that. They do export for making money, and if you make more money because of INR kicker, it's good for you. But I think INR pressure is anyway going to be there, because India's, as I discussed pre-COVID also, our fiscal situation, our growth situation is very, very bad, and on the same time we have fallen to COVID, where the government stimulus package also is much lesser, and I'm talking about a monetary stimulus or a fiscal stimulus, is much lesser than what we could have done. So I think we'll see a much more longer time for recovering the economy. And unless we do a large reforms, we might see a continuous depreciation of rupee. And if you have this kind of event of rating a downgrade, if that's the case, then you'll see more outflow on the both FDI or the FI, or at least you'll not see a large inflows coming in this country, and which will have impact on currency. So till we, actually there's opportunity when 2014, when Mr. Modi came, I think rupee actually went to 60, and from there we are now back to 77. So I think there's opportunity for us to go to 40, but I think we are not able to do it, because ultimately, if you don't have a strong currency, the country cannot get the best benefit out of it. We need to have a great currency.
So one more question, another interesting one is whether one should look at investing elsewhere other than India. Say you have a lot of offshore funds right now which are being opened, where you can invest into tech companies like in USA. So should one start considering those options as well?
Yeah, I'm hearing a lot. In fact, I have a couple of investments in that kind of thing. But I think you need to be very careful again there also, because we don't know. If we don't understand India, how can we understand the foreign basket? So my own view is that you can start little bit, but you need to be having hands on it, because if you can't, if you just put it on a recommendation of someone, you don't know what's going to happen. It's like a sectoral fund. That is a flavor of the day today. Tomorrow you might see a, because we have seen large corrections in past also. So I'll be a little bit cautious in putting, unless you're expert, unless and I believe I'm not expert. So unless you are expert on American market, I think you can invest. But my own advice is first let's understand India and Indian market, and then go to the other markets.
So one non-technical question: what books do you recommend for aspirants in the field of finance, and who are your mentors?
Oh, my mentor. Okay, I have many mentors. So I think the recent one which I am reading, and I used to like Warren Buffett a lot, at least a couple of years back. Sorry, but my new mentor, or my new guy which I follow a lot, is a guy called Jim Simmons, and he has a book called How to Solve the How to Solve the Markets. How to Solve, SOLVE, the markets, and this is written by Greg Zuckerman, and he's the finest fund manager in the world right now, and he has given a close to 55% CAGR return for last 20 years, versus Buffett of some 14-15%. So I think this is what I follow right now, and I think the world is changing a lot, and times have come where every guru is changing, every opportunity is changing. 6 months back, if you could have asked me honestly, which is your favorite, one of the favorite sector, I could have said tourism, right? Because I was very bullish on leisure, that theaters. So, but post COVID, the things have changed dramatically. A telecom, which, as I told you, which was on the deathbed a year back, and today we are seeing a telecom in a heaven, actually, in a very, very good situation. So I'm following right now Jim Simmons. That's what, and of course the more trading kind of investment guy. It's not a long-term guy, but Buffett is always a all-time favorite for everyone. But I recently follow Jim Simmons.
So another question is on the metal sector. Do you think metal sector should do well over a period of time?
Yeah, metal is a sector right now in next 6 to 8 months may not do well, but there are opportunities in metal also. I think every sector we need to kind of work in such a way that we are buying non-leverage company, and metal sector unfortunately is over leveraged. As of now, the demand globally is on a contraction mode. Whether it's any country, as I discussed, the whole world is going to degrow at 2% this year. So metal may not see a immediate big spike in the consumption, but over a period of 4-5 years, if your horizon is 4-5 years, metal stocks are available at a very, very cheap valuation right now. But the time horizon is going to be longer. It's going to be at least 5-year, 4 to 5 year ownership. If you have that kind of view, you can, because ultimately we are going to consume the same metal, same aluminum, same steel once the economic downturn will go away. So I think metal is a great sector, but you have to really find very careful in picking up the good quality management and the under leveraged balance sheet, because that's where the biggest problem happens.
Another point is the economic stimulus package that was announced recently has probably little or close to nothing to stimulate the demand. And also, I feel post-COVID, there will be a larger problem to address, which will be the employability. A lot of employees will start facing the acts, and the salaries are being cut, etc. So, how do you see this thing spanning out over the next few years?
It's a tragic situation. As you rightly said, the package was not enough, and of course, I know the government has its own constraint and fiscal challenges are there, and you have to one side manage the rating agency, other side you have to see that economy comes up. But I think the choice, in my view, the choice have been actually you should have given the more package. You could have given money directly transferred to the lower end of the people, or could have cut the personal tax, so you could have make everyone happy, because corporate tax cut is lower. Today, corporate pays 25, 26, 27%, and we pay 40% plus at the peak level. So if you could have done the uniformity, it could have been a great, because anyway, the collections are not going to come. Or you could have done the GST cuts on the essential item, could have been benefit. I know there is a challenge in revenue, but still you could have done that, because 2020-21 is anyway washed off. Coming to the employment, I think it's going to be a big challenge, because there are 2-3 problems which are facing. One is, as I told, automation is anyway going to take away a lot of job, irrespective of COVID. Second, the COVID came, which is changing the way people think, the way people work. And third, very important, is that this got a lot of corporates will get a chance to really kind of get away from the inefficient employees or very high ticket employees, or cut the salaries. So I think it's going to be a very tough time for at least next 1 year. And I'm reading every day there's a few corporates are coming in saying we are cutting this many jobs, we are cutting this many jobs. I was surprised to see a Zomato saying they cut the salary of 1,300 people by 50% or something like that, after raising $2 billion from the PE fund. So I think it's going to be a challenging time for many industries, many sectors. Financial sector will see a lot of job cuts. Hospitality will see a lot of job cuts. Airline will see a crazy amount of job cuts.
Another thing is, we recently heard Vedanta announcing that they would delist and go into privatization. Do you see more of that coming? And what should investors do, particularly if you are
I will not answer on Vedanta particularly, because that's not a correct thing to do. I don't think so. More buybacks are going to come at least this year, or more delistings are going to come this year, because most companies will either try to raise money or preserve the money what they have. So if you see last 1 week or 2 weeks, we had seen Hindustan Lever raising money through the Glaxo one. Your Kotak Bank has today announced money raising. Bharti did yesterday. There are a couple of more coming. So most corporates are going to see money raising activity or conservation activity, rather than doing a delisting kind of thing. At least I don't see that's going to be the trend for 2021.
I think we are done with most of the questions, and we are also there on time. Any last closing comments?
I think it's pretty simple, and as I said, we have to live with the COVID times for sure, for at least 6 to 12 months. So keep your house clean both the way, actually, as well as no leverage or less leverage, and just try to see that you have enough income source to pay that leverage, because things are not going to be easy for next couple of years unless we see some dramatic change globally, or some big reforms from the country. Otherwise, we'll have a tough time for next 1 to 2 years. And try to see that you allocate your asset very, very judicially. And also within the asset allocation, try to buy a good quality, high quality, whether by bank FD or even a real estate, or even buy debt paper. Just try to see that you have done enough work. So I think we, as an investor, we need to see that we do a proper due diligence in wherever we put our money, because these are hard-earned money. But now the time has come that instead of doing a 100% due diligence, you might need to do spend more time on the same thing and try to say that you're buying the right thing, because that will actually kind of decide the, and then third, I told you need to be more adaptable and fittest to survive. So I think it's going to be a summary from my side that it's a challenging time. So we need to be very careful. And like Jack Ma of Alibaba rightly say, if you survive in this year, a couple of years, you're going to be anyway thriving after that. So we need to pass this 12 to 18 months of tough cycle with a lot of conservatism and a lot of prudence. Thank you.
So I would just add to, like, I mean, a lot of people, like what we are discussing right now is survival today, in today's time, is now akin to growth. It's as good as you're growing.
Exactly. You're right. Absolutely.
And
right.
with this, I would invite Pratik to give a formal vote of thanks. Pratik, over to you.
Thank you, Ankit Bhai, for granting me this opportunity. Vikramji has started explaining how the pandemic has affected the global economy at large, and how it will also affect the various sectors, and how will the future be transforming. Like more and more economies will be spending in the IT and the healthcare facilities. We are seeing how the pandemic has literally affected the middle class to the migrant laborers at large. Also, how the way there will be a mindset, the pre-COVID and the post-COVID mindset will be a huge thing to deal with. More than anything, which I feel, Vikramji, it's like a mental block, which you rightly have said that we have to come out of it within, say, next 6 to 8 months post the pandemic. And also how we are very thankful that how you have exactly explained how our future investments should be there, how you need to save money, how you need to invest and think over it rather than going all in, and invest in your future rather than keeping it with yourself. And we are also thankful for answering the questions given to you by all our participants in a very simple and lucid manner. And I think it will benefit all the participants at large. So at the end, I, on behalf of the Chambers of Tax Consultants, offer a hearty vote of thanks and thank you for taking this session. And we shall expect you to see soon.
Thank you. Thank you, everyone. Thank you. God bless you.
Thank you, Vikram Bhai.
Thank you.
Thank you, Vikram Bhai.
Thank you so
Very
much.
nice session.
Shalobin, thank you, everyone. Thanks so much.
Vikram Bhai, for your just information.
Vikram Bhai left.
Oh, he has left.
You can talk to him personally.
Okay.
Mehul Bhai, shall I close now?
Yeah, please. Thank you, Maitri.
Thank you, Maitri. Thank you, Maitri.
Thank you, Maitri.
Thank you, everybody. Bye.